So hello everyone, this is the Impact Factor, and I want to tell you about what I think about is the difference between investing and speculation. This is the way I see it. So you can always go and Google it and see what's the official definition. This is the view that I got from a couple books I read, a couple investors I listened to, and sort of my own reasoning here. So let's cut to the chase. Investing is basically when you get your money. This is going to be your money. Here's Here's a dollar bill with some old, definitely not minor attracted person on it. And you got a couple of those, and you pass it on. You effectively buy equity, or if you don't understand that, you buy a share, buy a part of a business. And so, what you're effectively doing, maybe let's draw a factory here for a business or something like that. Here's a factory that's manufacturing labubus in China, and you're hiring all those child workers. What you're effectively doing is you're giving the money to that business so that with more money, maybe let's use a dollar sign for the money. With more money, the company can produce more output, and that's good. So here you're gonna have one labubu. This is one labubu, and here you have two labubus. So you gave the company more money, and now they have more capital, what we call it, and they can expand their production. They can invest that money, and after that, you can get dividends from them, which is really nice. So let's draw a line here for dividends. Or the way it usually happens is other people notice. So now there's going to be, I don't know, there's going to be Dave and Jake. They should have eyes and maybe smile, and they should have some money too. Here's some money in their hands, and they are going, wow, sell me your business, or sell me a share of it, because you don't usually own the entire business. And you're just sitting there and blah, 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 right? And you're just sitting there and you go, well, I'm not going to sell it for the same price that I bought it at. I want more. Maybe 2x, maybe 3x. That's really the stock market. That's what you get. You can wait, you can get more, maybe you're going to get less, maybe the company is going to go down. That's a different topic. But the thing is, this is how investments operate. You give money to a real company, and that real company then makes real stuff that other people, let's say maybe Jake and Dave are also customers, they buy it. So you have a company, you have an entity that's actually producing something. There's an output. That's important. Speculative vehicles don't produce any output, maybe apart from tears and fucking divorces. Now for speculation, your point is to find another person. Maybe I'm getting a bit ahead of myself. You have some money, right? Again, here's your Donald Trump on your bill, and you give that money to another person. Well, here the similarity is also there. You also probably buy this stuff from another person, but you buy it. It's actually different. Okay, I'll explain it too. You buy a commodity. You buy something, and usually in the past it used to be material. So it used to be like gold. It used to be silver. Now, well, you could have also bought options and futures for those. We'll get into that later. But now more and more popular is Bitcoin. So you buy this fantastic thing, and I'll make a video explaining my entire position on Bitcoin, and that's really it. Like the next morning, you can go to www.coinbase or whatever, and you see this sad website, and here it says, "Wow, you got one Bitcoin." congratulations. And that's all it really does. And maybe Bitcoin is at 110K, and it makes you happy. This is you smiling right there, smiling a lot. But then what happens when Bitcoin drops 90%? You're not so happy anymore. You're sitting there and you're pretty sad. And the website is actually still saying the same thing. You still have one Bitcoin, except it's now worth. Why did I have to choose uneven numbers? Well, it says 11% or something, right? You now have 11,000. Sorry, you now have $11,000. So you're sitting there and thinking, "Gee, I just lost 90K." And this is really the difference with commodities, with speculation. The point in speculation is that there is no output. And this might not sound too bad at first. I actually think that's very bad. I don't like to speculate for that reason. Some people make a differentiation that, if it's long term versus short term, then it's an investment versus speculation. Uh, I don't think that, because if you're investing if you have a long-term thesis and the market takes a shorter time to realize that you're correct, how does it make that as a speculation all of a sudden? It was still an investment. You just happen to be proven correct by the market faster. So I think the time horizon thing here is not real. I suppose there could be some misunderstanding coming from the fact that you in both cases you usually buy from a person, right? So if you buy Bitcoin, you go to another person, and if you buy a stock, maybe we should make a category, right? So a stock, a bond, a warrant, those are investments. Anything like a commodity, so Bitcoin, gold. Well, Bitcoin is not really a commodity, of course, right? It's a cryptocurrency. But anything like that. A house, actually. I hate it when people say, I wanna buy a house because it's an investment. So there's people who say, I want to buy a house because it's an investment. Um, this guy. It's not. It's not an investment. People think it's an investment because it goes up. But that's not the case. That's just simply stupid. That doesn't make any fucking sense. Just because something goes up doesn't mean it's an investment, and just because something goes down doesn't mean it's a speculation. This is retarded. And effectively, if you think about it, if you buy a house, right? So this is a house with a tree. It's 3 hours by bullet train from New York, and it's gonna cost you just $2 million. What do you think about that? Want to buy that? That sounds like a good deal to me. It's gonna, after all, it's gonna, if it keeps going, if it keeps going at the previous rates, it's gonna double within 2 weeks. Want to buy it now? Well, that's a fucking stupid deal. And effectively, when you buy this, you give money to the company that's making new houses. So here's new house number one being built, house number two being built. It's just the groundwork being laid down and some people working on it. It's basically the reverse of a stock market, because a stock is a fraction of a business, right? You give money to a company so that they can keep producing something, and they can hopefully produce more of it, and that way you're gonna get rich too. But if you give money to people who buy houses, they are going to use it to buy more houses, to make more houses, to build more houses. So if the demand keeps going up, and it's not met with sorry, not demand. If supply is going to keep going up and it's not met with raising demand, then you're effectively giving the money to the people who are going to lower the price of your house. which is pretty funny. This is a reverse investment. Buying a house, first of all, is a speculation. Secondly, it's actually a reverse investment. And you can clip this. This is me, the impact factor, saying that. Me, the impact factor. The point that I was making here is with the fact that you also buy. They're both sad because it's late stage capitalism. So you know, they're sad because you're buying both Bitcoin, commodities, and whatever, and stocks and bonds from other people most oftenly, rarely at IPOs. But in the case of companies, you're serving for something like exit liquidity. Um, for first time investors or for second time investors. So it's not the same. And this is basically it. My point is, long story short, is this: investing is when you buy something that produces something else. So there is an output, and then you can reap the fruits of what you sowed, and you can get dividends from it. You can get buybacks. Dave and Jake are gonna come back and say, "Oh god damn, that's an amazing business. I want a part of it," and that's how you make money. Meanwhile, speculation is when you buy something that has no output. So Bitcoin, gold, silver, or a house, and you're just counting for new gazillion immigrants perhaps coming in and saying maybe I should use I should probably be using the brown one for this. There's going to be 20 million of them, and in that case your house is actually going to go up because they're also going to have 25 million children that are a little bit crippled because they're inbred, but that doesn't matter. And that's how you make money in a speculation. You need more people to buy the things that you are buying, or you at least need one very wealthy person. So this guy's going to be fat. I should draw a suit, but I don't know how to do that. He's very fat and he's got fat hands and he's super ugly. He's probably a Jew. And he goes, "Oh, I'll buy that Bitcoin for $10 million." But he also has to think that there's going to be more people that will buy it off of him. So, this is what speculation is. No output. Thanks for watching. This has been the Impact Factor, and see you in the next one.